All right. I'll be unable to do a video this evening, so I'm going to do an intraday video instead. So the market is still open and price action is still moving around as I do this analysis. But intraday, we can see that SPY is breaking out from the gap down open, and we are now breaking that resistance, which is just above SPY 437, which means there's a very good chance we're going to start higher towards these gap fills. And we do have that gap fill above 438, 447, and 455. So it is looking like we're breaking out of the range to the upside, which favors the bulls, and price action is now starting to break out above all the moving averages. So it will be important that we do close above this very critical support, which is right around SPY 437. As long as we can hold this breakout and start to form higher highs and higher lows, this is very likely a correction within a bull market that is completing, which means we're resuming the bull market, which is going to take us towards SPY 460. So manage risk at that breakout and the critical support at 430 and stay bullish as long as we continue to see this pattern formation building. On the NASDAQ 100 triple Qs, we are also bouncing off of the 50 EMA of support, and we're getting very close to the critical resistance test at 370 and then the resistance trend line right around 373. As long as we can break that resistance, this correction is likely over and we're continuing higher. So manage your risk right there, right around 366, which is the 50 EMA. Or the breakout level right down here between 361 and 362 can also be used as critical support, which is also the 20 daily moving average. On the Dow Jones, we're up right around their resistance at 341, which is critical resistance, meaning we need to break through here now. And if we do break through, look for that gap fill at 344 and the resistance trend line between 345 and 346. You can stay bullish above 336, or you can wait until we break that resistance at 341. On the small caps Russell 2000 ETF, we're up 1.8%, sitting right at the neckline at 176. And I told you if we break that neckline, this is a double bottom, which easily takes us up to close the gap at 180 and likely even higher. This is still a downtrend of lower highs and lower lows, but if we get this confirmed double bottom, it could mean the downtrend is over with and the small caps are getting ready to break out. The ARKK ETF is currently up just over 2% and trying to hold this support at 38. So you could stay bullish above 38, but do keep in mind if that breaks, we are likely going down to fill the gap below 36. The VIX is currently down right around 17 and still crushing from 20, which is exactly what you expect to see in the bull market. And that's the same behavior we've been seeing all year long, where the VIX spikes to 20 during pullbacks and then breaks down and starts to crush as we continue the rally. Bitcoin is currently right around 28,500, so it did get the breakout yesterday because the candle did close above the resistance, and now we're holding the resistance as support, which is a successful retest. So if we continue higher from here, the bottom is likely in at 25,000. On Tesla stock, we're currently up around 1%, and Tesla is retesting the breakdown of 255, which is now a test of resistance. And keep in mind, earnings is coming up tomorrow, so I really don't suggest taking too much risk in here until we see how this wedge breaks after earnings, because this is a very well-defined consolidation wedge. If you want to stay bullish, your risk is all the way down here right around 230 in the gap fill at 218, which is a big drawdown if we do go that low. And in order to get more bullish, I would like to see a break of that resistance above 274, or at least a break of this resistance at 264. On Apple stock, we are currently right around 178, and it looks like we did hit the full projection to the downside that I had, which was that test of support between 174 and 175, and now we're starting to get a hammer candle off the lows. So it does look like there's a very good chance that I'm going to be correct, that we're getting that higher low pullback before we continue higher towards the gap fill at 191. So stay bullish as long as we're above 174. So jumping back over to the S&P 500, this is clearly a bullish day because we gapped down, and instead of selling off, we're now getting a very bullish engulfing candle on SPY. And I just showed you how some of the biggest market moving names like Apple are starting to look like they could be putting in their higher low. So do not have a bias, follow the chart. And right now the chart is telling us this could have just been a correction that's now ending, and we're getting ready to start back into the bull trend, which is going to take us to new 52-week highs. We're absolutely crushing this market on the Stocks Channel Discord and Bang Trade Alerts, and you can find out how to join either of those services by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.